Good morning and welcome to Thursday. Yeah, the second day of February. Joe and Jason, Patriot Radio News Hour, the day after the Fed meeting. And all I'll say is we have a new word. Yes, remember some of the old words, Ben Bernanke. It was a little frothy. It's just a subprime problem. Jay Powell, he loved the word transitory. Well, now we've got another word of the day. I lost count. If you were playing a drinking game, back in the day when we're in college and you'd play those drinking games and anytime somebody said a certain word, everybody had to drink. Well, if you were playing a drinking game yesterday, you would have been totally intoxicated. No way you're going to be operating a motor vehicle. The new word is disinflation, Jason. Disinflation.
I mean, I remember even the movies, the Big Short. And they were driving around with the real estate agent because they're trying to figure out if this thing's really going to happen. And they just said, "Oh, it's in a gully." The housing crash was a gully, and now we got disinflation. And disinflation
was the word of the day yesterday. We got a 25 basis point rate hike, and then you know what? I thought we'd get tough talk. Oh no. Very, very dovish. I'll say this right now. If you said, okay, Double, what do you think is going to happen? I think we get one more quarter point in March, and then they're calling timeout. And that's up for debate. Worst case scenario. The scenario that Jay Powell, I think, tried to pretend was maybe they'll do two more quarter point rate hikes before they call an end to all of this. We had gold was a rocket ship yesterday, all the way up till about 7 o'clock this morning. Got to 1960. So another new high on this rally. That's a great thing. We got some profit taking. Another great thing. For all of you technical gurus out there, you'll know what I'm talking about. For those of you that don't, just take my word for it. We had a big gap up in the chart this morning. Those are things you don't want to have. When you have a long-running bull market rally, that gap got completely closed. They went down, sold it all off, completely closed that gap. I think we're looking good. We got rate hikes out of Europe and out of the UK. Jason, they went 50 basis points, but they followed Jay Powell with the soft talk, if you will.
Yeah, I just think after the next couple of months of the February numbers that you're going to be reporting, Joe, and then the numbers early in March before that rate hike decision, I think it's very possible that they're just done. I really think that this is it, Joe. That they're just gonna just sit there and watch it now and not bring them down and not bring them up. I could see a quarter point in March, absolutely, but I'm telling you, if their disinflation keeps them very happy. February and into March, they may not hike it anymore, Joe. We'll see where the markets are at that point.
Boy, they get happy quick, don't they? Yeah, we had a couple good disinflation. Yes, we'll see. Really, some crazy numbers today. First of all, I want to say that, do you know that the S&P is almost back to 4,200? Absolutely insanity when you talk about PE ratios, how it can be this high. But again, just interesting to see that the Dow's down today. But we got jobless. It's jobs week. So yesterday we had a soft ADP number. Today we got jobless claims. I've been doing this a long time. I don't profess to know everything about anything. But Jason, another new low, 183,000. This is so far below anything that you would consider normal. It kind of defies logic. And then Challenger Gray and Christmas. We got those numbers today. For those of you that don't know, that has nothing to do with Christmas. Okay. Nothing to do with Christmas. This company tracks mass layoff announcements. So every state has laws that say, hey, if you're going to fire X amount of people, you need to tell us ahead of time. So Challenger Gray and Christmas, they're the ones that collect this data. According to them, mass layoff announcements for January of 2023 rose by 440% from January of 2022. Was also up about 100% from December's planned layoffs. According to Challenger Gray in Christmas, mass layoffs exceeded 100,000. Yet we're not seeing it in these jobless claims, Jason. And we're getting a lot of that, right? We get one number that says, okay, this isn't good. And then the next number says, hey, everything's great.
Well, Joe, I guess I got a quick question that maybe you can clear up, maybe even for the audience. If you have 3 jobs and you get fired from one, do you get to do a jobless claim?
You do not. You do not. So that
there you go. There's your job market.
Patriot Radio News Hour. When we return, we'll recap the markets and we'll talk about the other economic data points that came out. 800-951-0592. Joe and Jason, Patriot Radio News Hour, allamericangold.com. Quick look here at the markets. The Dow's down 120. That's off the lows. That's better than what it's been. The S&P's up 57. The NASDAQ, a big move today. This is all Meta, a.k.a. Facebook. Apparently, the job cuts were working at Facebook. They reported it wasn't a great number. They made it sound real good, after you drop the forecast a bunch. But Meta, I guess, better than expected. The NASDAQ's up 300 points. Gold now depends on where you know. So this will be one of the weirdest days that we'll have seen in gold. Because when Jay Powell starts talking, the press conference, the gold market's closed in New York. The electronic market is still open. And again, remember, I always give the New York price. And the New York price is based on the COMEX and whatever the current contract month is. So right now for gold, it just happens. It's a good one because the contract is a February contract. I will tell you that it is down. Gold's down $4 at 1923. I want to say Kitco, Jason, Kitco, I think has gold down close to $30. Same price, but that just shows you what gold was doing as Jay Powell was regurgitating disinflation over and over again yesterday.
Yeah, the Kitco I'm checking is really strange, Joe. I'm having mixed results. I had that minus $24. Now it says it's up $4.40, and silver's up 51 cents. So I don't know what.
So you're up. I got Kitco's got it down 27. Silver's at 23.72. I'm telling you, silver's up 18 cents. Kitco saying it's down 23 cents. Doesn't really matter. The prices are what they are. This market recap brought to you by our good friends at YRefi. I've been telling you to check these people out. We're going to find out really quickly what data points are right. And by listening to Jay Powell yesterday, I believe the data points that are correct are the ones like Challenger Gray and Christmas. Layoff announcements up 440%. I believe ADP with the softening of the job numbers. The Bureau of Labor Statistics, Jason, those numbers are starting to look really sketchy, and you wouldn't use disinflation with numbers like that. That's what I'm saying. So I'm telling you, be ready for a major shift in direction here. But that's why you get a company like Y-Refi. If you've got $50,000 or more, not tied to Wall Street. We've told you before, it's all in the student loan market, private student loans, where the students had actually defaulted. They figured out, Jason, hey, a lot of these people are actually capable of paying. But the banks, they loaded these young kids up with debt, got their parents or their grandparents to co-sign. The second they missed a payment, they just ruined their lives, and now they're untouchable. Well, Y-Refi has the solution, up to 10.25% returns guaranteed, no matter what happens. Right? Hey, I don't care. The S&P can go to 5,500, or it can go to 3,500 or 2,500. You're locked in. Those rates are guaranteed. Invest. YRefi.com. That's the word invest, the letter Y, REFY.com, or 888-YRefi24. So, Jason, we had durable goods out. That number, Boeing had a big order. So the headline number was good. But, of course, when we do durable goods, we kind of throw aircraft and military out because it's so up and down. Outside of that, the number was horrible. But again, right, you've got the all these different numbers. One part says good, the next part says horrible. We also had the numbers out for the JOLTS data. This number came out yesterday. Again, this is a Bureau of Labor Statistics. I don't know what's happening over at the Bureau of Labor. I love a good conspiracy. I do. But I truly don't know. When I look at these numbers, I can believe both. But the Bureau of Labor Statistics says that the job openings, and now think about this. Now remember, Challenger Gray and Christmas. Mass layoff announcements up 440%. Everybody knows housing is slow to dead. Everybody knows car sales are slow to dead, that people are having trouble paying their credit cards, but yet the JOLT survey says that companies looking for workers, 11 million. That's near, Jason, that's near, the highs of last year. And then UBS comes out and says, hey, by the way, we've done our own little survey, and the Bureau of Labor Statistics is full of crap. And I'm like, I don't know. When you go out here in Phoenix, it's things are fairly busy. I'll say this. I actually went to Realtor.com today, and I said, you have the ability to pick a city. So I picked Scottsdale. Okay, right? That's where I live. And I said to Realtor.com, I want to see all the sales for the city of Scottsdale in the last 7 days. Guess what Realtor.com told us? Two houses sold in a city the size of Scottsdale. So I don't know. I don't get it. Because when you go to the restaurants and there's people in it, traffic still sucks. You know what I'm saying?
Yeah, Joe. I mean, it's an interesting situation when it comes to economic news, because I lived through 2008 like everybody else did. Because of my job title and where I was economically, I was virtually untouched by the whole thing. Now, I did own a house, and my house price came down, but I have to rent or buy somewhere. So even though my house, I was a little bit underwater, I think, for a short time. The way I looked at it, my mortgage is just as cheap as rent, and plus it was a nice house. It's like, well, so that didn't affect me, and it didn't affect me in the job market because for whatever reason, people ordered a lot of pizza during the housing crash, and so there was some extremely bad things going on, and the news showed the emergency as hot as they could, Joe. I get the feeling that we're just having the same kind of crashing information as we did in 2006, 2007, leading into getting worse 2008, 9, and 10. I think the same things are happening, but I think that everyone is calm because the news wants to keep it calm right now. I was talking to Joe this morning. By 2024, when I believe a Republican will be elected president, you better believe the economic news will be crazy, especially after the Republican is elected. Then the same bad economic news can be happening, Joe, and they'll send out the emergency alarms. And since we're not having that big full scale downward cycle of the markets, where it's all rigged in my mind, Joe. These big companies like BlackRock, Vanguard, State Street, which own huge percentages of these companies, if they hold their positions or add to their positions, they make these market numbers look better. That's why I think we've seen it as big as they are, they can't get it to go up the last couple of years, but they kept it sideways. So these market numbers going up, they could go up a little bit more this year. I could see it happen, and then guess what? It'll come right back down. I don't know why, but they've pegged it to these levels because I think it's timed, Joe. It's a timed event. Whatever's going to happen is going to happen. But I don't think they want blood in the streets kind of information in the news cycle, whether it's happening or not, until there's more of a Republican situation. I'm not saying that they like Republicans more. They just tend to have all the bad news when a Republican is in charge, Joe.
Yeah, I don't buy it, but I get it. Jason, that's been Jason's little mantra. Hey, they're going to crash it on the Republican guy, not on the Democrat guy. I don't know. I think they crash it when they're ready. I agree with that. My thought on that, one of the things is the digital currency quite not ready yet, right? Do they need a little more time on that? We'll have to wait and see. I was really fascinated though by disinflation and how quickly Jay Powell, it wasn't like he said it once or twice. I mean, it was double digits, and he doesn't talk that long. In the whole thing, after he does his statement, he answers like 6 or 7 questions. The whole thing can't be 15, 20 minutes. He literally was saying it almost once a minute, which is really, really shocking because I'm sitting here as an example. Orange juice futures just hit a new all-time record high. Did it yesterday. Out in the beef sector, they were talking about hamburger prices are going to skyrocket because of declining cattle herds. Remember, we had Bill Roberts on the Half Empty Cup of Joe a few weeks ago, and he was saying absolutely cattle herds are down dramatically because they can't afford to feed the cattle. So they're like, oh, you know what? Let's bring them to. If I can't feed them, let's slaughter them.
It's interesting, Joe, that something that you said a lot early on when Biden was elected, but you haven't said too much lately. But I think it holds more true now than it did the first couple of years he was president, which is very Jimmy Carter. Don't the times we're in very Jimmy Carter-like, right? Doesn't it feel like we're in the Jimmy Carter part 2? Doesn't it feel that way? And then what happened? Ronald Reagan came in. It was all the inflation, all that stuff. But I don't think we get a Ronald Reagan this time, Joe. I think this time we get something else.
Yeah, it's going to be really, really interesting. By the way, cattle herds. This is what they call beef cow replacement. Okay, so pretty simply put, if I'm going to bring one cow to slaughter, I've got a calf to replace it. It's at the lowest levels since 1962. Yep. Now, we had, I don't even know, 120, maybe 104, maybe 150 million less people in the United States in 1962. I know what did we say that we got somewhere around 330 million, but we know who knows how many 20 million illegals on top of it. Who knows how many we really got? But Jason, that's just indicative. And again, that's not disinflation. And I told everybody how lucky we got. We got lucky with oil. China's now reopening. We're seeing a lot better economic data out from them. I think it was Goldman Sachs says, don't be shocked if we're back at $100 by $800 a barrel by April. I don't know. We'll see. But Jason, it just feels like transitory all over again.
Yeah, and something about your cattle numbers, and this is just me throwing something up there, but we have this chicken shortage and this egg shortage, and we have less cattle being ordered or less coming to market. I mean, if you don't have money to buy steak, Joe, I guess you buy chicken, right? Maybe that's where all this chicken shortage is coming from. Think about it.
I don't know. What's so funny is my wife yesterday, she's been on this hard-boiled egg kick. She goes, I paid over $10 a dozen for eggs for the first time. Yeah, right? Crazy. Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour. And, here, we had Barrett Jackson here last week, the big car auction. They did like $190 million, but it didn't seem, and I don't know, I'm not that was more Eric's thing, but it just didn't seem like, that it was setting the world on fire. They auctioned a lot of cars, and there was a handful of cars that went over $1 million, but it had a feel to me like a lot of peak pricing may have already occurred. And then listen to this, the largest luxury Rolex watch dealer, they announced layoffs. So that's what caught my eye. But they're saying that Rolex watch prices are falling, and they on their website, I guess they sell every Rolex possible, and the really obviously just a basic Rolex is a pretty good chunk of money, but some of them can be worth big money. But Jason, apparently maybe some softness. I don't know what art's doing right now, but are we seeing maybe the millionaires, the billionaires stepping back a little bit, maybe?
Yeah, I think so. I think there's, like I said, they're calling it disinflation. I think that they don't want to say that it's coming to an end or it's going back to normal, because I think they're trying to say in a very nice way, hey, it's going to go down from where it was, but we're still going to have it. And I think it also means they don't know where it's going to head. And you talked a lot, Joe, last year about demand destruction. I mean, we've got tons of that right now. That's why at the end of the break, that last segment, I said, well, maybe the chicken shortage has a lot to do with it, and the cattle, having less cattle being brought to market has a lot to do with just people can't afford steaks, right? That's demand destruction. So it's just happening so doggone slow. One thing you're not reporting that we're not talking about, Joe, is how the markets are just better, and we're seeing gains, and we're seeing GDP as being this huge thing that we're going to look at these huge numbers. We're not saying any of that. It's just not fire in the streets, right, Joe? It's just, it's just this sideways grind. And I do fault a lot of this more, a positive spin on what's happening with the markets on being, well, the news just doesn't want to say it's horrible, Joe. They just don't want to say it. They got to do everything they can to make it, put lipstick on a pig, so to speak.
It's going to be interesting. It's going to be interesting because there are signs that say it is, and then there are signs that say it isn't. Right? I'll be honest. I'm interested in seeing this, because when I listened to Jay Powell yesterday, you could just tell I'm making the case I need to stop raising rates, which means to me, don't buy too much into all these, the good numbers that you're seeing. Those may be coming quickly to an end. And we got to stop raising rates. That's just what it sounds like to me, which I think is, again, we're seeing the dollar come way off. The dollar hit a high in the 120s late last year. The dollar's trying to hold 100 right now, Jason. So it's already lost about a sixth of its value. But this is something where I think we're going to see more dollar weakness as the central bank says, hey, we need to stop raising rates. And the only way you can justify doing it is, I guess, you have to have disinflation.
You have to have it, Joe. Yeah,
right. I mean, you can't say we're going to stop raising rates and we still have inflation, right? You can't do it.
Correct. And we don't know what they're doing anyways behind the scenes. I do believe that we'll have a higher interest rates for a long time. I think that's going to be with us for a while. The only question is going to be, when are they going to start printing again, Joe? That's what it's going to be. I think we keep the higher rates for a long time. If they can have markets that look healthy and they'll make small gains, and they got 5% interest, base interest rate, start printing, right? I think that's what we'll be looking at later this year. I don't know if the rates won't go down, but I think the printing could start at the end of this year, early next year.
Well, it's interesting. The choice of words matters, because really, if you think about it, why wouldn't he have just said deflation, right? But he didn't, right? Disinflation, right? Like I said, when I started the show, we've got a new word, right? Because he can't say deflation, because deflation means I've got to lower rates. Deflation means I need quantitative easing to come back, right? I need all of those things. Instead, they create this new word, disinflation, which essentially, I think what he's trying to say is, well, we've got some things that prices have gotten better at, some things not, but eventually, and I think he's probably going to focus in as the housing data goes longer here, we're going to see some of that inflation numbers and shelter primarily come down, and all of a sudden give the appearance that there's no inflation. But then you go to the supermarket and you're like, no. And unfortunately, I think we're at the low. Gas prices a few weeks ago, I think that was the low, about $3 a gallon here in Arizona. That's probably the low there. So it's going to be interesting because he didn't use deflation.
I don't know if he really has the Fed chief ever really said anything about deflation, because that's for them and their corporate buddies, Joe. They're deathly afraid of deflation, because that means your assets are worth less. So I don't think they ever really used the word deflation, Joe. I think that's, for them and their rich buddies, that's like a really nasty word, right?
That is a horrible word. And again, why does it matter? Because a lot of you out there are saying, well, geez, Joe doesn't sound very concerned today. He doesn't know. He's a little confused. Maybe things are going to be great. I'm going to tell you, that's not what I'm saying. You're missing it. What Jay Powell was really saying is, we've got a problem. These banks, and you know who they are. I mean, there's only 4,000 of them left anyway. And let's face it, really, honestly, if we're being honest, only about not even 100 banks really matter. You take the top 20 banks in this country, and you've got 95% of all the deposits. And guess what else you have? 95% of all the derivatives out there. That number, what's the number after trillions? Quadrillion, right? We're quickly approaching a quadrillion in these dark pools that, if we truly have deflation, means the banks are going under. That's what it means. Patriot Radio News Hour. We'll be back after the break. (800-951-0592) Patriot Radio News Hour. Joe and Jason, and very dangerous words. And I know, to give you an example, why do I know this? Has anybody seen the bond market today? Have you looked? The 10-year note is down to, well, let me look. I'm going to give you the exact number here, but it was 3.34. So the Fed just hiked rates 25 more basis points. We're between 4.5 and 4.75, and officially I want to say it's like 4.6, maybe even 4.65. And the 10-year note is falling down to lows that we haven't seen. I mean, this is, Jason, this was a 10-year note when the Fed's funds rate was like at 1%, 2%, not at 4.5 to 4.75%. But it just tells you this is a problem. Because what Jay Powell may be insinuating is, hey, all of a sudden, all this debt may not be worth it. Right? Think about it. If home sales really get ugly and prices end up getting cut drastically, what happens? Well, all the home mortgages got to be reevaluated. A story breaking right now, and this one's huge. One of the richest men in the world. Matter of fact, I believe for a brief while, he became the richest man. Gutman Adini, he's from India. He's somewhere between the richest man in the world and the fifth richest man in the world, depending on stock price. His company right now, Jason, there is a major run on all of his companies. This is huge. Just in the last 72 hours, they're talking about a loss of hundreds of billions of dollars. Credit Suisse yesterday told Bloomberg they have designated a zero value for all of his company's bonds. Anybody is trying to use as collateral, saying, we don't want them. We're giving that zero value. In other words, if you're using his company's bonds as any form of collateral, Credit Suisse right now is saying they're worth nothing. This could be huge. This one guy, he's so wealthy. This is what can take banks down and take them down very quickly.
Well, Joe, and I mentioned that hedge funds have never been more short on U.S. Treasuries than they are right now. And if you think about this rate hike cycle that started in 2022, if you want to invest in U.S. Treasuries, Joe, if that's something you want to do, why would you buy when the rates are at 1 or when the rates are at 2 or the rates are at 3? If you know it's going to 5 or it's going to 6, isn't that when you want to buy them so you get more bang for your buck? And so that's why I think the pause may happen now. And if they have a rate hike in March, I believe there will be some buying of treasuries, Joe, once they stop the rate hikes, because then these guys are like, okay, this is the time to get in, right, Joe? And the problem's going to be is if the inflation is under control. That's why I said they got to show everyone that this inflation is disinflation. They got to show that, hey, we're going to pause here, and now you can mop up this mess of treasuries that everyone's trying to get out of their lower interest rate treasuries. They have to take discounts on all the lower interest rate stuff, Joe. So I think they want to take a pause on the rates, and I think they want to stay there for a long time, hoping that governments and companies are going to start going back into this when they know it's not going to go up any further. But Joe, that's the key to me. I think you'll see normal stuff when they pause.
This is one of those things where you heard a lot of these asset managers at the beginning of the year telling you to buy foreign stocks. Let me give you an idea of how big this guy is. 1 out of every $10 in the Indian stock market is related to his companies. So this guy by himself is 10% of that entire market. And Jason, there's talk of potential Ponzi scheme type things. I mean, this could be one of those things. We talk about black swans and where are they going to come from? What are the ramifications for all these things? I don't know. I don't know a lot about this guy. He's huge in ports. He's huge in power, and he's huge in green energy, Jason. But this is big. You can't sit there and have 10% of the Indian stock market wiping out half of its value in 3 days. I mean, those are things that who's on the other end of these things, right? What bank is holding the bag on these?
Correct. And I think there's a lot of people holding the bag on this. And I think what they're trying to create, Joe, is a safe place for treasuries again. I think that's what all of this is about. They have a system, right? And they got to keep it as strong and as valid as possible, Joe. And when it comes to creating inflation, I've seen this before where you print a bunch of money, but if you don't print enough, you don't get the inflation you're looking for. And if you print too much, you end up with a massive inflation like we've been having. It's hard for them to hit the target that they want. So I think the soft landing, the disinflation, the transitory, all of this is them trying to put the markets back at a place with a lower standard of living, a higher inflation, and interest rates that are more normalized. So that people will love those treasuries, Joe, because if you have 0% interest rates, it's not quite as lucrative if the rates are going up.
Yeah, I don't. It's complicated. That's for sure. 800-951-0592. Final segment coming up. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. I've got nothing good today. And what I mean by that, gold has been wildly swinging today. Right now, down $11 on the day, 19.15. I think so. Kitco's probably got it down $30-some. It's been as high as 19.60 today. Believe it or not, the wholesalers' prices are up. A lot of this, I think this is just what I believe it or not, I like the action today. Pretty healthy, new highs, some profit taking. We'll get the jobs number tomorrow. We'll see what the U.S. jobs number is. Expectations right now, right around that 200,000 mark is the expectations. It's going to be interesting because remember, Bank of America says we're going to lose 150,000 jobs a month sometime in the first quarter. Now, obviously, this is a January number. But again, Jason, if we get a hotter number, we get something above 200K, it's going to be problematic because it doesn't fit Jay Powell's story.
Yes, that's correct. Yeah, that's correct. So, well, once again, we're in a kind of a wait and see situation. And I think the numbers, Joe, that you've been bringing day after day, it shows a very deteriorating bad situation. Just, some people in a bad situation think things are rosy and good, and some people understand it for what it is. And I think we have a war in Ukraine going on. We have geopolitical stuff that looks really nasty, getting worse. And we have stuff going on in this country with the inflation that people are having trouble buying the simple necessities. The message should be much worse than it is, Joe. But the average news, the mass media just says it's great.
It's interesting. I got one of our listeners was reaching out to me saying this guy was the third richest man in the world. He was down to the 16th richest man. I know we're having another big sell-off today, so I'm wondering if he's going to be sliding further down that list. And somebody else speculated, hey, maybe this is punishment for India buying Russian oil. Who knows? Anything's possible.
Yeah, things are definitely moving in interesting ways, and we'll see. Joe, all I know is this: gold prices are going to see record highs in the near future, and they're going to just keep going up. And if they're going to do a slow type of slide in the markets, then I guess gold will just keep slowly going up because the trend has been up, and it really has. We haven't seen a lot of down gold days. There's a down day here and a down day there, but gold is holding. With as strong as the dollar has been, Joe, to see gold doing what it's doing is astounding. All the market indicators are just off. They have all these rigged numbers don't make sense. They have to re-rig all the numbers. I think the way they calculate all the numbers, Joe, that you report in the next couple of years, I think they'll all be recalibrated. That's how I see it. They got to change the way they look at things.
Yeah, I think there's going to be a lot of that stuff, a lot of that monkey business going around, but just be vigilant here. We just don't know. It's one thing for him to lose money. That's not what I'm not worried about him losing money. It's all the money that was in these stocks that this guy owns. And all of a sudden, if those bonds aren't good any longer, there's a bank at the other end of these things. And these are big. These are huge companies. And I don't know that that's going to happen. But right now, when there's smoke, there's fire, Jason. And this is what happens when things start to slow down, when there's little gas, because a lot of these companies have been massively leveraged, and one little hiccup in that chain, and all of a sudden the whole house of cards can come crashing down on you. 800-951-0592. Jason and I, we got a very interesting half-empty cup coming up next.